Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's Friday, June 26th. Hope you guys are having a great day so far and fabulous weekend plans here. 4th of July is just around the corner, so next week will be a short one. But however, today we've got a lot of economic data to go over and some important ones at that. So let's jump right into that right now. The first item on here will be the personal income for the month of May. So obviously with April, we had the lockdowns going on and we had a lot of layoffs. So if you recall in the last month, when we talked about this big number, 10.8%, we were talking about because most of the people who got laid off at that time, we felt were the lower wage scales. So it kind of obscured the numbers to the higher side, which is why we think this is what was representative. Now, for the month of May, they're looking at a minus 7%, and it came in a little bit better at 4.2%, down 4.2%. Now, that's obviously because some people are coming back to work. We're just starting to reopen some of the economies at that point. At you know, and then we also got the next up is the consumer spending for the month of May. Now, obviously, because of lockdowns and everything was closed down, we had a pretty big drop in April at 12.6%. However, they figured spending rise by 9.9%, and it rose, but not quite to the expectations at 8.2%. Still a large number because people were receiving their stimulus checks, unemployment was still paying pretty well, and people were spending money. We also got important inflation data here with the personal consumption expenditure, or also known as a CPE, or PCE, excuse me. This is a Fed's favorite gauge of inflation, which is actually the next one down the core when you strip out food and energy. But let's start with the headline number here. It dropped 0.5% in the month of April. However, in May, it went up 0.1%. So if you look at its year-over-year number, it dropped dramatically from where we were. We were like around 2%. Now we're down. It went from April up 0.6% down to 0.5%. So we're down to 0.5%. And of course, the one thing we're going to have to look at now is possible deflation versus inflationary problems. The Fed's favorite target rate for core, this is what the Fed will look at, is core PCE or core or real inflation. As you can see here, in April it dropped 0.4%, but like its counterpart, it rose 0.1% in month of May. Now, the difference between the two is we strip out variables that we can't control, and that is food and energy on there. And that remained unchanged year over year at 1%. The Fed likes to keep that at 2%, that is their target rate. And that one, again, we're right around 2%, and it dropped pretty dramatically as a result of this. Now, let's go down to consumer sentiment in the month of June. And the previous report came in at 78.9. The forecast was supposed to rise to 79.3, but the final revision, because we'll get like two reports of these, it came in at 78.1. So instead of going upwards, it went downwards a little bit. And that's probably due to the unrest that was going on with the protests and everything else going on this month as a result of that. So let's go ahead and jump over and take a look at the headline news. So far, stocks are down on the day. Investors are kind of reviewing the bank stress test and loosening of the restrictions on the Volcker rule. The bank stress tests were supposed to be released around 4:30 East Coast time, I think, or no, I think West Coast time, or last night, yesterday. And of course, there's still talk about the loosening of the restrictions. So they're kind of looking at that, see if that might give the assistance or help that they need, more liquidity in the markets. Comments by ECBs or European Euro central banks. Christine Lagarde, she basically thought that we are probably past the low point of the coronavirus pandemic. Yeah, things will probably get a little bit better, but of course there's still the threat of a second wave. She made some comments of that. But of course, the big headline news really is coronavirus. I don't think we really need to post that, as that is the main thing. We're starting to see hospitalization rates in several states rise, as well as as they are testing more people, we're finding more people infected with it. So again, that's what's kind of spooking the market, and that's what's kind of dictating where we are going. So that's affecting the stocks in a negative way, but helping out mortgage-backed securities in a positive way. So speaking of such, let's go ahead and take a look at mortgage rates and see how they're doing. So as you can see, we're rising up pretty well. We're up about 19 basis points, and we did have a decent day yesterday. So mortgage rates will show an improvement today, which is obviously good news for everyone here. And we're moving that much further away from the 25-day moving average here. We're starting to get a little bit of a trend upwards here. So let's go ahead and take a look, see how the yields are doing. Yields started the morning way much lower, as you can see, that way down here, below 64.5. So far, testing the 50-day moving average and are sitting in at about 0.633 right now. Yesterday it was at about it was about 0.67. I think we were in the range of about 0.67, and that's been kind of keeping a lid. So this 50-day moving average now is going to act as a ceiling of resistance and help us keep the yields lower. And as you can see, we're starting to get a kind of more of a downward trend now on the yields, which puts less pressure on mortgage-backed securities and helping mortgage rates out as well. So again, translation, obviously the conclusion would be the mortgage rates are improving. We're starting to see some more signs that it's going to continue improving. So if you guys are in California looking to refinance or buy, I'd love to hear from you guys. Love to help you guys out with your scenarios and help you guys get into a better mortgage. Please direct message me or email me are the two best ways to contact me. Email is the quickest way I can respond. And we look forward to talking to you guys soon. And thanks for watching the video, and we'll see you on Monday's video. Take care. Bye-bye.